Wow, folks, we have got to talk about this. This was crazy. And I'm talking about the debt limit deal that just went through the House of Representatives yesterday. And I know, boring old politics in Congress, right? A bunch of 400 people in a room voting on a bill. Not very interesting, right? And the video is not very interesting either. But I was actually watching it all yesterday through the market close. No, so just to show you the impact, actually, we're traders here, but just to show you the impact on trading, actually, what this bill did to the market was insane. So we were all the way up here to 348, basically at this level. And as soon as this, the votes started getting counted for that congressional debt bill, which we'll talk about in 1 second, the market just hated it. The market just hated it and came back to this key resistance level at key support level at 347. I mean, plummet. So what's the deal? So this is the whole market. We're looking at the NASDAQ. The NASDAQ dropped nearly 0.5% on this debt limit deal. So just to show you how consequential this whole thing was. So if you're not familiar, catching up to speed a little bit. The US has a ton of debt, right? They do that through having deficits every year. That's how the debt accumulates. You have income, which the government gets through taxation, and then you have expenditures, which is everything the government spends money on, from roads and bridges to social services to healthcare to, Social Security to the military, right? Everything under the sun. So you add those two numbers up, you have income and you have expenditures. When the expenditures are more than the income, say I make $100,000 a year, but I spend $150,000 a year, then I have a deficit of $50,000 a year. And I'm basically hurdling myself towards financial, insolvency, right? So the government works like this. Right now we have $32 trillion worth of debt, approximately. I always like going to this website called usdebtclock.com, usdebtclock.org. Let's launch into it. Look at this. $31.8 trillion right now. There's a ton of stats here. It's pretty overwhelming. It gets you thinking pretty soon that, oh, wow, this is a situation that's going to be really tough to get out of. But anyway, what's the debt limit deal? Well, the Congress has a debt ceiling, right? It used to be back, before, I think this was early 1900s, they changed this rule. It used to be that you'd have to go to Congress for every individual item that you would want to spend on. So if you said, oh, I want to get, 10 more battleships for the military, I've got to go to Congress and literally have them pass that and give their stamp of approval. A very simplified answer. I don't know much about tanks, so sorry for that example. But that's how it works. Later in the 1940s onward, they made it very easy to spend money. They say, hey, we have a debt ceiling and you just can't spend above this. Basically making a credit card, a limit on your credit card, right? Saying, hey, Bruce, I have a $10,000 credit limit on my credit card, so I can spend up to $10,000. Well, how the government works is the government spends up to that $10,000 threshold, and then every, 5-10 years, they have to get together in Congress and say, hey, we're still spending way more than we're making. We're going to have to increase the debt limit. We're going to have to increase that credit card limit because, 10 just isn't enough. We're going to have to go to 15,000. We're going to have to go to 20,000. And it gets exacerbated. And this is how the debt ceiling is now, basically around $32 trillion. So it's very monumental, actually, this thing that they were doing yesterday. And I'll bring up the article. We can actually look into it and launch into the video. Debt limit deal wins House passage, easing U.S. default concerns, right? If the government actually doesn't have a debt limit increase, then they can't spend more money, which creates, risk of a U.S. default, which has, obviously never happened. But if did happen in that very rare 0.0001 chance, it would be cataclysmic. for so many things, for the stock market, for currency, for the world economy, essentially, right? And the U.S. makes debt payments to, different countries, makes debt payments to bondholders in a different way, in a bunch of different ways is how it, tracks expenditures. It's a very big beast here that we're talking about, the U.S. government, of course, but let's just launch straight into the article and simplify this matter a little bit for ourselves. So this is the video here, and I hope it doesn't play. Let me turn my volume down. Okay. Debt limit deal wins House passage, easing U.S. default concerns. And this was actually posted. I have a Bloomberg account. What's going on? Okay, I'm not logged in. Okay, anyway, we'll read this little bit and then we'll get logged in for the next video. So anyway, this was posted yesterday at 6:25 p.m. Pacific time. Debt limit deal wins House passage, easing U.S. default concerns. Number 1, measure heads to the Senate, where passage is virtually certain, right? This was the big snafu, basically, in the House, right? You've got all the House of Representatives voting on the bill, whether they want to pass it or not, and then it gets slid over, checks and balances, like how the U.S. government works, to the Senate. And then the Senate has to approve it, and then finally, the president signs off on the bill. That's how it works. Secondly, bipartisan coalition of moderates pushes bill through House. Of course, we won't get very political here on the show, but just, basically the whole argument, the whole problem here was that Democrats and Republicans wanted totally different things for this debt deal. So, I'm in real estate. I think you got to find a mutual deal between both parties. And, some people say that if both parties end up unhappy, then you probably made a good deal. So that's how deal making works. Essentially, you get, what's good for the buyers, what's good for the sellers, what's good for the Democrats, what's good for the Republicans, what's good for basically everybody. Nobody gets everything they want, but, you come to a compromise essentially. The House passed debt limit legislation forged by President Biden and Speaker Kevin McCarthy that would impose restraints on government spending through the 2024 election and avert a destabilizing U.S. default. Lawmakers from both parties joined to approve the bill 314 to 117 Wednesday evening, sending the measure to the Senate for consideration as a default deadline draws near. This is all very interesting to me. And I've been watching it closely, specifically with the stock market, because I'm trying to day trade every day. And looking at it, let's look at it on the 5-minute. As we were approaching, this is on the this is 2 days ago. So as we're approaching, we'll even bust out to 30 minutes. So look at this. We know that we're approaching, there's this huge, rally up in the market, even though we are approaching this whole debt limit thing, which is quite uncertain. So a lot of investors and traders would rather sit out of the market in this time period. But zooming in on the 5-minute, at 354, we really did see a little bit of a push down, basically. Control T here on Webull, and we'll see that it's about a 1.8% drop on the NASDAQ at least. Since yesterday, since the morning of May 30th. And then, we tried to rally a little bit intraday, and then we just, got shut down here when this actual bill passed. So what are my predictions? Well, like everybody, no one knows what's going to go on with the market, but I think that tensions are going to be eased by this whole thing happening. And the next few days, I might, I wouldn't be surprised if the market continues to go up because there's no impending whole news thing going on. Of course, the market is driven by news, and this was a big negative news piece, the U.S. debt deal. Of course, it's still going on. It has to go through the Senate, and still has to get signed into a bill, but. It's pretty certain that everything is going to go through. So I just want to post this quick update in how it impacts the stock market. I think that the market could rally from this. The market could continue to go higher. To look at the computer one more time, what was that high? 354. And when's the last time we hit 354? The last time we hit 354 was April 7th, 2022. April 7th, 2022. A little over a year. Or a little over not nearly a year. Yeah, a little over a year. I'm thinking months backwards. Sorry about that. Brain freeze. But anyway, folks, this is the little update. So thanks everyone for watching. Hope you like this video. Subscribe. Hit that subscribe button right away. I know like 80% of you, and I'm looking at my analytics. You know me, I'm a data guy. I'm looking at my analytics, and about 80% of the viewers of all my videos are not subscribed. So if you'd kindly please subscribe down below, and you don't even have to worry, hit that notification bell. You're going to get these videos delivered to you as soon as I make them. But I make a lot of videos, so you might not get updates for every single video, but you'll get updates for the important ones like this one. Okay, everyone, thank you so much for watching. Again, I'm Bruce, and I'm glad to bring you the financial news.